morning, a very good evening to everyone present here. It's truly a matter of great pride and joy for me to welcome you all to the special occasion. I truly would like to extend my warm greeting to our honorable senior professor Ajay Kumar sir, respected director sir Mahesh Sharma, and respected dean, our esteemed speaker, respected faculties, and dear students. I, Garima Gupta, alumni of DSPS, I feel truly extremely privileged to address you all at the 47th online interactive session hosted by Delhi School of Professional Studies and Research, an institute well known for its unwavering commitment to dis- academic discussions and nurturing leadership. Today's session adds another chapter to our ongoing journey of leadership and development and learning about the new corporate environment. It's truly an opportunity for each of us to engage in a meaningful dialogue, gaining valuable knowledge and grow into well-rounded individuals both personally and professionally. At DSPSR, we deeply value experience that goes beyond textbooks. We believe in preparing students for the real world by exposing them to practical, industry relevant learning. This session centered on the theme of leadership development. It is a fine example of how we aim to bridge academic theory with the corporate reality. It's with the great pleasure we welcome Mr. Mr. Ayush Behal, sir, who join us today at our respected session speaker, as our respected session speaker. We are equally pleased to have Mr. Taj as our moderator for this session. We sincerely thank you for both being here and for your willingness to share your insights and experience with us. We welcome you, sir and ma'am, to accompany this session. Audience notes. Let us now take part in a symbolic ritual that enlightens us, that lightning of the ritual lamp. This act represents the removal of darkness the un- and ushering in the wisdom and light enlightenment. With this flame of knowledge, guide us towards clarity, confidence, and leadership in the days ahead. With this, I will now request Arun sir to kindly play the visual lamps video. Thank you, sir.
You are muted, Garima.
Yes, ma'am. Sorry. It's my Thank you, sir. It's my pleasure to introduce today's distinguished speaker, Mr. Ayush Bhajwal, manager in debt fund management at Kotak Mahindra Pension Fund Limited, a graduate of prestigious Department of Financial Studies at University of Delhi. Mr. Bheg com- combines a strong academic foundation with years of hand-on experience in fixed income strategies and portfolio optimism. His professional journey has been marked by constant focus on navigating the complexity of the debt market with analyzing patient and strategies foresights. Mr. Ayush plays a role at Kotak Mahindra Pension Fund Limited on one of the India's leading pension fund houses has been has seen him spearhead initiatives that enhance yield performance while carefully managing risk. His expertise spans a spectacular spect- spectrum of debt investments, embe- embe- entitling him to structure portfolios that aligns with the long-term pension objectives, known for his data-driven approach and keen understanding for macroeconomic trends. He plays a crucial role in ensuring stable and sustainable returns for policyholders. Today, Mr. Ayush will share his perspective on evolving trends with the Indian fixed income landscape, including interest rate dynamics, and many more knowledge and the experience he gained from working in this field. He also enlightens the best practice managing pension funds, debt investments is increasingly complex market environment. We are honored to have you join us and we look forward to an insightful session. So,
Thank you. Thank you, Garima, for the opening remarks.
you're welcome, sir. As for our moderator in this current session, Mr. Taj is currently pursuing his BCom from our college. Highly motivated and detail-oriented finance enthusiastic, eager to kickstart a career in dynamic fields of finance, practical knowledge in fields of analyzing financial data and demonstrating it in goal span operational job stimulation. They also conduct individual credit analysis and develop risk migration strategies through stimulation, further showcasing their analytical abilities. Now, I would like Mr. Taj to take on this session. Thank you.
Hello, Taz.
Hello, am I audible?
Yeah, you are audible.
Okay. So thank you so much, sir, for joining this session.
My pleasure. Thanks.
Okay. So we would like to know that how was your management?
I think I lost you in between. Maybe there is some connection issues at your end.
Now I'm
I think your voice is breaking in between. You may go ahead.
okay. Now I am
Yeah, slightly better.
okay. So can you tell us, sir, about fund management?
About fund management. So basically,
Basically, what is the fund management?
basically, like currently I'm part of the fixed income team on the credit research part. So, I'm currently employed with the Kotak Mahindra Pension Fund Limited. So we actually manage assets of more than around 7,000 crores as we speak. So, like the total assets would be deployed towards the GSECs, the corporate bonds, or the equity thing. So the equity thing is taken care of by the equity guy, and I here look at the credit part of it. So basically what happens is, so for example, if whatever corpus uh, we have, we have to deploy it as per our scheme strategies. So what happens is, so for example, if we want to deploy any amount to any particular security, there has to be some research done on the security, how much we can invest, when can we invest, and what is our investment horizon on the same. So my role is towards that part only. Like I look at the credit research part, whatever credit. so the analysis part and all those things. So once I propose that we as a pension fund, we want to invest in a particular security, it goes through a series of processes, right from the QA, basically the quality assurance or simplified check from the our fund manager. And secondly, if the fund manager is also okay with my recommendation, then it follows the second process, which is towards the investment committee. And if the investment committee is okay with our proposition, then we can go ahead and invest as per our scheme. So that is actually what I uh, in Kotak Mahindra Pension Fund do. So my part is limited to the research things and all. When to invest and when to exit, all those calls are taken by fund manager. We are also involved in that process, but the ultimate call lies on the hands of the fund manager.
Okay, sir. So, what key factors do you consider when constructing or managing a debt portfolio for pension fund?
Basically, there are various factors. So, for example, if you must have seen, so basically, if you look at the corporates, there can be two or three kinds of corporates. So, the first thing, it may be a PSU. So, for example, the Power Finance Corporation, the Rural Electrification Corporation, PFC, RECs, all those are PSUs. Okay, so there is a major government backing behind the same. So we have to invest in or in those bonds also. Secondly, there may be a bigger corporate house. So, for example, Aditya Birla or Bajaj for that matter. There is also a bigger parent sitting behind the eventual corporate. So there is also a backing from the bigger parent, which may help them or extend them, entails financial flexibility if the financial metrics go sideways. So these are three types of corporations. Thirdly are the emerging corporates. So for example, if I were to name one or two, it may be a new age housing finance company or an NBFC or for that matter, any infrastructure company, wherein there may not be a backing from a major parent or a government, but still due to the yields. So because our investment mandate is to increase the return of our shareholders, and shareholders for us is the unit holders or the like the pensioners who are providing their own money, so that the money grows uh, as the time passes by. So our mandate is to increase the return, and we have to optimize our portfolio in such a way that the returns can be maximized in lieu of the risk that we are taking with respect to the issuers. So basically, there is a risk return trade-off, and we have to see how we want to adjust, how we want to position our portfolio. So that's how we try to manage our portfolio here.
Okay. So, what are the major factors that investment decision?
So major factors can be, so see, there are two, three things here. So first of all, when we look at a company, the first part of it is we have to look at the fundamentals of the company, whether they are strong. Because you know that all the companies, they work as per the going concern basis, and the fundamentals play a very important role, whether they will be able to operate as a going concern in our in the near scheme of things. So first of all, being a pension guy, our investment horizons are typically on a longer side. So while we say that the mutual funds, their sweet spot is between 3 to 5 years, our sweet spot is basically on a slightly longer tenor, maybe close to 8 to 10 years. So we try to add our portfolio in that range only. And if we are taking a call for 8 to 10 years, sitting in the current time horizon, the fundamentals of the company have to be strong. Secondly, like in the recent times, you must also be like all the students would be reading the newspapers and going through the regulators' commentary. We see that the regulatory risk has taken a prominent role in overall business dynamics of a company. One day a regulator can come and it may ask the company to stop the business, and it may also impose some penalties or some compliances related procedures which may hinder the growth prospects of the company. So we also take into account whatever regulatory risk it is prevailing in the environment and what's our outlook on the same. We try to inculcate all those things in our analysis. And thirdly, like how much comfortable are we with the corporate governance? How has the company performed over the cycles? And how is the rating agencies viewing the company? So, for example, if the rating of a company has been stable for quite a long time, it is good. But if it's volatile in one cycle of a business, it goes the other way. So, for example, there can be some outlook change, rating downgrades, and in the other cycle, when the businesses are flourishing, then the ratings are eventually upgrading. Then we need to take calls on the cycles too. So basically, all those things. In nutshell, we have to see, like we have to check all the check boxes here, right from the fundamental, the regulatory, the corporate governance, the rating aspects, all those things.
Okay, so we have discussed now about the importance of the factors.
Hmm.
Now, what about the challenges that you face about the investment decision?
Sorry, I lost you in between. Can you repeat?
Sir, I am speaking that what about the challenges you face when you do debt investment decisions?
Yeah, there can be various challenges when we take investment. As I told you that we are taking decisions in the current time horizon, and we have to take a longer call, maybe more than 5 years for that matter. So what happens is, as we have taken a call and we have invested in any instrument for that matter, there can be instances where so for example, if I have bought a security X today, and 2 years down the line there is some change in the shareholding or the ownership of the company that nobody or in the industry would have envisaged at that 2 years prior to that. So there may be a case where the instrument may get illiquid. We would not be able to sell it. So there can be various instances like that where the liquidity gets dried up. We have also seen, like you must have studied in the NBFC liquidity crisis which happened in 2018, way back 2018, the ILFS DHFL crisis. So the yields shot up really high for the NBFCs, and the fund managers were not able to liquidate their positions. Like there is a huge impact cost if they were to liquidate their position. So these are two or three of these things, but challenges may come and they will come, and we have to do what is best for the our fund, and we have to optimize the same so that our shareholders can get maximum benefit out of it.
Okay, thank you for the information, sir. So
Mm.
now I would like to ask that how do you credit using debt instruments for the portfolio?
I think Taj, I think you can switch off your video. There is I think not very good bandwidth at your end. I'm just losing you in between.
Now I'm audible, sir?
Yeah, you are audible now.
Okay. So I was thanking you for the information. Your
Mm.
credit risk while while incorporating what is in this investment of investment what pension portfolio. How do you incorporate credit risk in your portfolio decision?
Credit risk in your portfolio decision. So our
Yeah, pension
portfolio,
portfolio.
yeah, our portfolio is completely dependent upon the credit risk. So, for example, if I am investing in a AAA rated security, I would be having a little risk if the corporate is backed by a PSU or uh, like a bigger parent, for example, HDFC or, Bajaj, for that matter. Then the risk may be a bit lower. But when we go down the curve from AAA to AA to A, we don't invest in below AA rated securities. But still, if you go down the curve from AAA to AA plus to AA, so credit risk also increases, and there has to be some uh, risk premium, some liquidity premium with respect to the same. So we do incorporate all those things in our decision making, and whatever best deal we have at that particular moment, we bind that deal.
So, so the past previous years, we are hearing a term ESG investing. So how do you incorporate that into your decision?
ESG listing.
Yeah, ESG investing.
Okay. So see, ESG has been a talk of the town for quite some time, and if I were to speak, uh, like my personal opinion is, as of now, there are not a lot of models or a lot of techniques wherein we can quantify the impact of ESG risks on our investment. So basically, we try to incorporate the ESG part of it, but there has to be some we have to take it with a pinch of salt, because quantification is not that great as of now, though we have seen some issuances from corporates in the recent times wherein they have issued green bonds and all those things, and their basically the destined purposes uh, for raising that security is also defined in the documents wherein they can invest, they can use that proceeds for onward lending towards a specific purpose only. But still, I think the scope, there is a lot of scope when we can progress in the ESG part of it. But as of now, as we speak, I don't think a lot of liquidity is there in that green bonds. And I think there is a specific set of investors wherein their mandate is to invest in green securities only. And for that particular scheme of things, there are some issuers which raise money with respect to the same theme, and generally the buyers and issuers both are lesser with respect to the ESG bonds.
Okay, sir, thank you for this. And now can you describe the process of rating of a corporate bond or a financial instrument from
So there are various things that come into play when we are rating. Like earlier, I was part of the a rating agency, ICRA. So I've worked there for more than 2 years, and we as an analyst there, we try to deploy various methods in order to rate a company. So just to give you an example, so I was handling the banking and financial services sector there. So I used to deploy a Grammar approach. I think you must have read it, or you may can like you can easily Google it, and you will be able to get some knowledge around the same. Somewhere it is written as camel, somewhere it is defined as a Grammar approach. So basically, C refers for capital adequacy, R for resources, A for asset quality, M for management, E for earnings, and L for liquidity. So basically, broadly, we define the Kremlin approach by all those things. So by if we were to go like point by point on all those things, so we try to incorporate the all these aspects while drafting a rating report, and based on our assessment, how the all these parameters stands vis-a-vis the industry average and vis-a-vis its peers, we try to rate them how it is. So, for example, if I say I were to rate various banks in ICRA, and if I were to talk about the rating of a particular bank, for that matter, if I take SBI, so if we look at the capital adequacy part of it, it will not be too great. If one were to compare SBI with the likes of HDFC, ICICI, because SBI is a public sector bank and there is a government backing behind it. And HDFC and ICICI being a private sector bank, they may have access to capital and they have demonstrated their ability to raise capital. But capital is available on call for SBI being a government owned bank. So all these things comes into play. Like we have to take into cognizance all these things while like so basically rating is in nutshell we can say the outcome of all these parameters uh, which when consolidated into a particular score or particular subjective judgment, it eventually the output is a rating which we ends up assigning to the corporate.
Okay, thank you, sir. And now I would like to ask that how would rating agencies avoid conflicts and maintain objectivity in a
Mm.
client-based model?
So there are various things. So first of all, I think by far what I have seen in my experience, for us to maintain a neutral stance and maintain objectivity, I think it hadn't been a challenge for me in my years with the rating agency. Because what happens is, basically, when you are interacting with the management or when you are comparing a company with a particular company, you are comparing the same based on fundamental and financial parameters. So like the management can say a particular theme about a company, but the whatever the numbers suggest, we have to take our decisions in cognizance with the same. So if the numbers are suggesting that the rating should be reaffirmed or at the particular level, current level, then whatever we do, we go by the numbers, which the financial parameters or the fundamental part of it suggest. So there may be some subjectivity involved with respect to the same. So for example, if during the COVID, the financial performance of all the companies, all the banks, be it financial sector or the normal corporate sector, those were impacted. So we took 100% note of it, and our stance was like maybe the current operating environment may be bleak, but going ahead, once we are done with this COVID, the outlook would improve and the companies would still regain their competitive edge or their operating performance. And I think that was the case back then. Ultimately, the recovery was there, and it was like everyone was saying it was a V-shaped recovery. So I think all those things we do take into account.
Okay, thank you, sir. Now I would like to ask that uh, what are your role? What
Mhm.
is your role as a senior associate analyst at ICRA, and how did you prepare for it?
Basically, I think I got that role from my campus only. So like I end up getting a job at ICRA. So the major part of it was whether I will be deployed towards the corporate sector or the financial sector. So eventually, I was like marked towards the financial sector. So that was the case back then. But if you were to ask me how I prepared for ICRA or how I looked at it at that particular time, so I think our course curriculum was quite substantiated. It was quite informative, and I think it was in line with what the corporates at that time were asking for the uh, like the new graduates to have a knowledge about the same. So we were in line with what the market was demanding at that particular time, and I think we all were prepared because we were reading the same thing. We were like we were educating ourselves. Our professors were quite good because they were bestowing their all efforts so that the whole batch got placed. And I think we all placed with flying colors, and everything went smooth. So I don't think we find any challenge from that part. And eventually, it's all about the company. One or the other, the candidate would, if he has the potential, I think he would eventually end up getting a job.
Okay, sir, thank you. So, what are majorly the financial tools that from your MBA that help in your real life?
Mm. Basically, first and foremost, uh, like uh, don't underestimate the power of Excel. Excel is quite a powerful tool, and I think uh, uh, if you are going towards the consulting firms, or for that matter, EY, uh, PwC, and all those companies, I think there may be some tools required, such as Tableau and Power BI and all those things. But if you are going towards a hardcore finance job, I don't think a lot of tools are required in the initial stages. There may come a time when you have to eventually adapt and you have to learn about newer tools. But I don't think so in the initial part of it. Excel suffices, and Excel is a very, very powerful tool. If you are comfortable with Excel, I think uh, the initial step towards your job grinding is done. So the Microsoft Office, all those apps embedded in the Microsoft Office, it's the first and foremost. It serves as the base for whatever you do in the corporate life. So I think first and foremost, the student should learn, and they have to have a grip around Excel, Word, PPT. So all those things. They truly help an individual to like do the things smoothly, and it doesn't pose any challenges when you are doing any kind of project or any kind of analysis on your part.
So, we surely agree with that Excel is very important for our lives and in
Hmm.
finance also. So, how did your engineer background complemented your career in finance?
Hmm. So, like when I was doing engineering, and later on when I eventually got admitted to Department of Financial Studies, so I had somewhere in my mind that I should go, because fintech was the theme back then. Uh, we had seen various fintech players like Paytm, Freecharge, all those companies. They were booming and grooming. So we all had that aspiration in our mind, that being an engineer from the computer science field, and then going towards the finance, I think we had somewhere in our mind that we should go for the fintech things. So engineering do complement my role here also, because like in nutshell, whatever you learn in your academic career, whatever you learn in your life, I think you may debate that it 100% of it does not get devolved in your job profile, but somewhere at some place at some time, I think it does play a role. And at that particular moment, you realize that whatever you have learned in your initial part, or initial academic careers, it does play a role, and it helps you at that particular time. Because eventually, when you are doing any work, you are bound by timelines, you are bound by regulatory guidelines. You have to do what is required, what is expected from you, and you have to deploy your best efforts. So, and at that particular time, when a lot is expected from you, and I think at that time, if you are having any sort of pressure, or you feel some pressure out there, then the whole things go for a toss. So in order to like In order to avoid all those things, I think whatever you learn in your initial part of career, do please take a note of it, and don't think it's of no use and it will not play any part in your uh, the professional career. Does play a role.
Okay, sir. Thank you. And now you are certified financial fundamental analyst and a portfolio management.
Mhm.
So, how is this useful for you in your career and in the market to analyze the market? How it is useful for you?
So it is useful both on the professional and personal front. Uh, um, See, whatever we do, it's our daily job to look at the companies, look at the corporates, how they are performing, what the some numbers are suggesting, and how should we read them. And it is also beneficial on our personal front, because whatever we are earning, we have to deploy so that we can optimize our returns on our personal investments too. So we are like all of us are managing our personal and professional portfolios, both at a uh, like simultaneously we are managing it. So all these things do play a role. So if we talk about the portfolio standpoint, whatever scheme requires from us, so if it requires that 65% of our portfolio has to be allocated towards G-Secs or debt securities, and 15 to 25% has to be deployed towards equity, then it's our prerogative, it's our brain who should tell us that you have to deploy this much percent in G-Secs or corporate bonds, and this much percent in the equity with respect to the current operating environment, keeping in mind how future outlook looks like, and under the regulatory ambit, so that we can optimize the returns. All those things when we learn during our academic period, all those things, I think we read it and we forget it, uh, like keeping in mind that this will not help us in our future, but the basics are always same, so we have to stick to the basics and follow the suit.
Okay, sir. Thank you.
Mm.
Now, can you give a piece of advice uh, those who want to break into fund management
Mm.
or those who want to are currently doing MBA?
So, my first and foremost advice would be like you have to be very, very meticulous, because in the field of finance, in the field of fund management, uh, like, so if I were to relate the same with a particular real estate deal. So when you are going to buy a real estate deal, you do several soft checks whether the land or whether the land parcel, or for that matter, if you are trying to like you buy a flat or a already built house, you do a soft check whether the property is clean in title, no disputes are there, whether the documents are kept in place, and whether the prices are in relevance with the current market prices. So all those things said and done, when you eventually buy that land parcel or flats, you do a proper documentation process, keeping in between a lawyer, or for that matter any local uh, local player. So, but in financial securities, there is no such sort of things, and we are guided by whatever there is, whatever written in the information memorandum or the debenture trust deed. So, whenever you are carrying out a trade, you have to be very, very meticulous whether the all the aspects that you want to capture, the same is getting captured as part of the document, because any word here and there, like the commercials of the transactions can go for a toss, and we have seen in our history, and wherein all those things have went for a toss. So the document drafting, all those things, you have to be very, very meticulous. The eye to detail aspect of it has to be really taken care of. And thirdly, whatever you do, you don't do it half-hearted. If you are enjoying the work, then it will surely pay you back. But if you are doing just for the sake of doing, and I think you are not serving justice to the company and for yourself too. So you have to be true to yourself. These are two, three things that I must advise any individual, whether he's going for a professional job or for that matter, if he's opting for his personal business too.
Sir, I totally agree with you.
Hmm.
There should be passion in your business or whatever you're doing. So, what inspired you to break into fund management?
So, ICRA, when I joined ICRA, uh, joining ICRA was not in my hands. Like, uh, like I don't have multiple options because when we were just about to join, COVID hit, and we all were thinking whether our offers would be honored or it would get revoked. So our concern was different at that particular time. So when we have joined like the set of students when we have joined ICRA, so all of us have that thing in mind because like when we start doing anything, there has to be an ultimate objective where you want to see yourself in a certain span of time. So when I was in ICRA, because the credit rating, we are eventually rating bonds, but the market is being made by the fund managers, the guys that are sitting there. And overnight, one cannot transform from a rating guy to a fund manager. And if you want to become a fund manager, you have to go about it step by step. So the first step was to enter any fund management firm, be it a mutual fund or a pension fund. So herein I work for pension fund, but I am closely engaging with the mutual fund guys too, and I do share a good camaraderie with them. So herein uh, I also look at some portfolio companies of the mutual fund too, because I'm overall a part of Kotak Group. So eventually I had thought of joining a fund management company, and I eventually landed up. There may be certain times when because the opportunities are not that much here. So just to tell you, our team size is of four people, including the fund manager and CIO. So not very but the team sizes are quite lean. And if I talk about the mutual fund, the team sizes are at most 11. So the team is quite lean, and whatever shifting or things happen, I think it happens via replacements only. No new positions are added often. So I think whenever you get a chance, I think you should go for it. And first and foremost, you should be ready for the opportunities, because opportunities will not knock your door twice, or it will not knock your door coming that I will be coming in this much time. It comes in a nick of second, and you must be ready to grab it at that particular time. So I was preparing for the same, and when the opportunity came, I eventually broke it.
Okay, thank you, sir.
Hmm.
So, during your internship at Edelweiss Financial Services,
Hmm.
what was the main key learning and how did it shape your career aspirations?
One, like on a lighter note, one key learning was I should not join a stockbroking company, because the pressures are too high there. And I like I don't want to be, if you are on the buy side thing, then it's okay. But if you are at the sell side thing, then you are at the mercy of your investors, because whatever they say, regardless of the time, they can knock your doors in the midnight. They can call you for the information that they require at any particular time, and you have to be available, because ultimately the sell side thing is purely a relationship driven thing. So my learning was that I have to transform my career from the sell side thing to a buy side thing. And I must say I'm fortunate enough that I found it earlier in my career.
Okay, sir, thank you.
Hmm.
And I would like to ask a question that what is your opinion? How do you think that Indian debt market will do in 5 to 10 years,
Hmm.
especially in retirement or pension funds?
So, like if I were to go a bit technical, I think the outlook is quite positive. We have seen various indices incorporating our GSEC benchmark, like JP Morgan Emerging Market Index. All those indexes are incorporating Indian GSECs too. And if I go a step forward, what we have seen in our past, wherein the spread of Indian G6 with respect to the US G6, it was very high. But at our current juncture, the spread has become very little. The spreads have narrowed, and if we hear about the same from our monetary policy committee's commentary, like the US, uh, the US is the apex in the the government bond market. Major liquidity is present in the USG6. By liquidity, I meant to say that you are able to sell or buy a security without with a negligible impact cost. Secondly, if you are there to sell in the market, it sells quickly. So US is a highly liquid market, and we have seen the very president of United States, Mr. Donald Trump. He has been urging the Fed chair to reduce the benchmark rates, but still they haven't gone ahead with the same. While our RBI governor has provided 100 bips cut. So I think that's also a good thing, and it bestows faith in the GSEC market that we are going towards the right direction. And I think the outlook is quite great. Maybe from an yield perspective, it would not be attractive for an investor. But if you look at it from a risk reward perspective, I think it's good.
Okay, thank you so much, sir. So, do you have any advice for the students that are currently in finance field?
Hmm. Give your best shot whenever you appear for an interview of a company, and just try to figure out where your interest lies, and like go in the direction where you follow your interest, so that whatever you do, you enjoy the whole part of it. And I think your corporate life should be a journey, not a race.
Okay, thank you so much, sir.
Any other questions from any other students? Want to ask? Please put your questions on chat box.
Feel free to ask anything. Let's not make it a formal session. Whatever you think, whatever you
Any
feel.
questions from any other participants? So I think so, no questions. Okay. Very good evening to everyone. As we draw the conclusions on this enlightening session, it is both an honor and am I visible?
Yeah, you are.
Hello?
Yeah, you are.
Yeah, okay, thank you. A very good evening to everyone. As we draw the conclusions on this enlightening session, it is both an honor and delight for me to extend a heartfelt vote of thanks on behalf of the Delhi School of Professional Studies and Research. To begin with, I would like to express our deepest appreciation to our distinguished speaker, Mr. Aayush Behal, sir. Manager in Debt Fund Management at Kotak Mahindra Pension Fund Limited. Sir, your insights into the evolving fixed income landscape, coupled with your strategic acumen in debt fund management, have been immensely enriching. Your ability to connect complex financial dynamics with a real world application has certainly left a lasting impression on all of us. We are truly grateful for your time, your intellect, and your willingness to share both. Our sincere thanks also goes to moderator Ms. Taz for guiding through this discussion with clarity, poise, and thoughtful engagement. Your presence added a structure and depth to the conversation, ensuring a seamless flow of knowledge. We are profoundly grateful to our guiding pillars, Senior Professor Ajay Kumar Singh Sir, Respected Director Professor Dr. Mahesh Sharma Sir, Respected Registrar Dr. R.S. Singh Sir, whose vision and unwavering support continuously elevate the academic spirit of DSPSR. To our respected faculty members, your commitment to excellence is always inspiring, and our students and participants. Thank you for your attentive presence. Your enthusiasm forms the heartbeat of such events. Last but not least, a big thanks to the entire organizing team. Your behind the scenes dedication ensure the success of this event. Wishing you all continued success and wonderful evening ahead. Thank you again, sir, for joining us
Thank
today.
you. Thanks a lot.